Now let's move on to our next session, which takes off from there, where we are talking about vision for future, how startups are revolutionizing real estate market. And we are going to have startups from across segments here in this session today. So let me first of all introduce our session members. Moderating this session will be Vyoma Pandit, co-founder Flow Realty India. Vyoma Pandit is an IIM Bangalore graduate and an avid marketer, known leader in real estate. Having spent over 13 years in real estate across companies like Lodha, Brigade, Shriram, she is known for her disruptive marketing strategies and use of new age tech to create case studies in real estate turnaround. Let me introduce our speakers now in an alphabetical order. I invite Mr. Amit Bansal, co-founder and CEO, 91 Squarefeet. Amit Bansal is a serial entrepreneur with interest in construction tech and augmented reality. In 2019, he co-founded 91squarefeet.com, a platform that helps offline retailers scale faster by providing property identification, store design, development, and maintenance services all under one roof. Our next panel member is Sanjay Mendiratta, founder and CEO of HeatCure. Sanjay Mendiratta has been the founder and CEO of HeatCure since 2018, and HeatCure is a nanotechnology glass coating firm that provides a solution to heat-related difficulties. With an exclusive patent for their Japanese nanotechnology, HeatCure innovative and energy-efficient technique meets the growing need for sustainable solutions and an expanding list of respectable clients who rely on their remarkable outcomes. Our next panel member, let me introduce Saurabh Vohara, founder and CEO, ALYF. So Saurabh Vohara comes with over 14 years of real estate experience. His skill set lies in disrupting the traditional operations of the real estate market, and his expertise includes business development, marketing and sales, business strategy and operations, relationship management, and leading startups to successful businesses. Shiv Parekh, founder and CEO, hBits, is our next panel member. And he founded hBits in 2019, a leading fractional ownership platform in India that democratizes access to real estate for everyday investors. Under Shiv's leadership, hBits has attracted over 50,000 investors, making it the most experienced and leading fractional ownership platform in the country. Next and final member for this session, I introduce Sunny Garg, co-founder and CEO, Crip. Sunny Garg is a young and ambitious serial entrepreneur. At Crip, he serves as the CEO and co-founder, leading the property management app in the country. The platform's goal is to simplify the property management processes and make a significant impact on the real estate market. So this is our panel for this session. Let me hand it over to Vyoma now.
So hello, everyone. Good afternoon and welcome to the special session on PropTech startups that are revolutionizing real estate. Before we all start off, and for the audience being very honest, Sapna did not give us much time to connect with each other before the session. So we're gonna all get introduced to each other now. And before we start with the whole panel discussion, I'd just like to take about a minute from everyone here to just run us through their journey in what has led up to the startup and what was their background before they started their current company. What is the key product or service they're trying to deliver now in the real estate space? Yeah. So we can start with Amit. Amit, everyone here knows you founded 91 Squarefeet, and I also believe you're currently having a very interesting AI-led app, Yoda app, right? Where you're trying to get an infographic-led content creation platform. Yeah. And before that, you had a very different background in Quiffers, right? So if you could just shed a little bit light on your journey before starting 91 Squarefeet and what kind of solutions are you trying to offer with your current startup?
Okay, thank you, Vyoma. I hope I'm audible. So before starting 91 Squarefeet, I co-founded another company that goes by the name of Quiffers, QUIFERS. It was a logistics automation SaaS tool wherein we created an algorithm which help you create or optimize your logistics cost. Like if it is for the FMCG manufacturer, they have a various combinations of SKU which needed to go to multiple distributor points. So with our algorithm, we kind of optimized on 22 parameters and give them a route plan along with the truck selection, along with the loading pattern. so that they can save on their logistics spend. So the tool was a hit amongst multiple of FMCG manufacturers and last mile retailers like Vijay Sales, Dabur, Marico, Anchor, Panasonic. Even till date, they are using that solution. We happened to sell that company to a logistics MNC. And at that point in time, my thought process was we are a little late into logistics, and construction seemed to be a bigger opportunity. So we have been like for the 4 or 5 years, we've been focusing on making logistics more efficient with technology. So why not build a similar kind of technology to make construction more efficient? And to our hypothesis at that moment was the logistics has seen a massive technological adoption in the last decade from 2010 to 2020, and similar kind of technological adoption construction is going to see in this current decade. And that year 2019 seemed to be a good start point for us. So that's when we took that call, and we wholeheartedly focused our efforts into building technologies to make construction more efficient. Along the way, there were multiple, you can say, tributaries in our journey, wherein when the COVID hit, we were strapped for funds. We started another app, Yoda app. We raised some funds there. We kind of survived. Then towards the end of 2021, we realized that there's a bigger game in construction. We should not be diluting our focus in multiple areas. So we ceased operations at Yoda, returned all the money back to investors, and wholeheartedly focused on developing 91. Right now, 91 square feet.
I was trying to find the app on App Store, and maybe that's the reason why.
Yeah,
do something totally different, and then I went on to read the description again. So maybe there's already a Yoda app doing something else.
Yes. So we were off to a good start, but we had to take a call somewhere because things were moving very fast at 91, and even ourselves amongst co-founders and investors, nobody was liking it that we are riding two boats. So that's where we needed to consolidate focus on 91. So currently, 91 square feet is a 200 people team across 3 offices, Delhi, Mumbai, Bangalore. We have a construction management software called R-Dash, which is used by almost 100 plus contractors and co-working companies and builders and developers to manage their construction project. Along the way, we also opened a design and build vertical, kind of went hands-on into doing the project ourselves, and that vertical also scaled to 100 crore revenue annualized. So things are going well for us.
How long do you take to finish a standard size retail store?
So it takes somewhere around 35 to 45 days, but with a smaller format, we are also doing in 10 to 15 days. If like we get a lot of, so depends on the kind of format it is. It hovers between 15 days to 60 days. But for a standard 1200 square foot retail, you can say 35 days is the benchmark. But we have kind of evolved past retail. We are doing lots of commercial as well as warehouses, design and build projects as well.
And what kind of time would you have crunched as compared to before? Like what percentage of the time do you do it in now versus traditional formats before?
So the benchmark, the way we studied it, we believe that the typical time to close a project is around 60 days, and we have crunched it by almost 40%. Is the way how we believe it, but there's no standard parameter or measurement established in the industry. So data is up for argument. But yeah, I think that we have made some definitive headways in the way we are managing our project with technology as well as the solutions we have deployed on the operations front. So yeah, so I'm very confident about the speed we are bringing in, the right benchmark, maybe 20, some may argue 20%, some may say 40%.
Great, amazing. Yeah, so very, very interesting format. We'll come back to this as well in the course of the discussion. Yeah. Moving over to Sanjay. So Sanjay, you founded another very interesting startup, and I'm very curious to know, how did this whole transition happen from leading corporate sales in Dish TV to going and finding almost like a material science kind of company, right? In heat resistant solutions, nanotech based company. So over to you to share your journey in brief.
Yeah, thank you, Vyoma. Hi, everyone. So being from the corporate background, I have served corporates in various streams like banking, telecom, media, and last happened to be Dish TV. While joining, I thought that 3 years stint would be enough, and I'll serve the, whatever is required, the role, and then probably move out. But it took 9 years to quit. So every time I used to go and there was a new assignment which was waiting, and it was obviously lucrative. So, and in that stint only, we were actually looking, the digitization happened. So that is when all the set-top boxes were mandatory and cable connections were going off. So we were in the process of chip sourcing of a set-top box. And there was this Japanese company who were supposed to go meet, negotiate, and close. So I was closer to the founder, Mr. Subhash Chandra, and his son Puneet Goenka as well. So they wanted that, okay, you go negotiate, close the deal, come back. So with the technical team, I was there. The meeting happened in a day, and next day I came to know that in the same place there was a conference happening for nanotechnology-based products. So I happened to enter there, met the manufacturers originally. They were doing things like, making nanotechnology-based paints for spacecrafts to reduce friction, and then, on the utility front as well. So, and there was this product which was talking about heat block being transparent. So I understood, and once I wanted to know better, and they simply said, no, this is a pretty futuristic product for India. And Indian market we don't think is ready for such a futuristic product now. Somehow convinced them, started R&D, put in my papers, got the product done, first batch came, and that is how the journey started. So this is basically a nanotechnology-based chemical that you do on the glass. The application is done from inside. So we see nowadays glasses are being used extensively in all the structures that are coming up. Three basic reasons being, it is definitely cheaper for the construction people who are, stalwart sitting here. No, it is a cheaper solution than doing a facade outside. Plus, it is a no maintenance fixture later on. At the same time, looks aesthetically pretty good. But and glass industry is growing more than 300% year on year from last 6 years now, and shortages are a daily routine there. So you don't get what you need immediately. There's always a waiting period. Processing units are running high and dry. And so I knew that glass industry is going fine. And this is a product that rides on that industry. So whenever you put a glass instead of a wall, you are actually allowing the entire heat and cold to come inside the structure. Right? Wall is a natural insulator. But when you replace a glass with a wall, it allows the entire heat to come in. A very classical example that I generally give during my presentations to clients as well is you hardly find a teacup without a handle. But a regular paper cup, a regular Starbucks coffee cup, or a barista cup, cardboard cup comes without a handle. Which means that glass has a tendency to transfer the entire heat outside immediately. Same happens with our structures also, but with strong HVAC solution and strong air conditioning, we somehow manage. And at the same time, there's a huge load on energy.
Neil Tucker, could you please put yourself on? Great. Yeah,
okay, so this brings in actually a lot of load on energy, and are not only India, across the globe, every nation is working towards getting carbon neutral going forward. And global warming, climate change are few issues which are always on top of mind of any bigger deal that happens. So I could not find myself aligning towards e-vehicles and battery business and everything. But I found this quite interesting, and we bought this product to India. So this coating, once it is applied on the glass, actually blocks 85% of heat on the glass itself.
Understood.
And keeps the glass transparent. Life of the product is good 12 to 15 years. So, and wherever we started pitching it, everybody was very, quite accepted towards it. So we thought, let us develop it further. So now we are working with clients like Radisson Blu, Domino's Pizza all across India. We are a part of the project team. A Domino's outlet doesn't open without this coating today. We are working with Leela Hotels. We are working with Marriott's. A lot of prominent brands are equipped. And now we are planning to open a distribution channel where we can have glass dealers, distributors associated, so that the product can be made easily available to a B2C client also.
Wonderful.
This is what has been so far.
Yeah, wonderful. Great. So I think you're solving a very important need that will also arise out of global warming. And I'm sure people and your clients will be thanking you much more in 3 to 5 years' time.
Yeah, hope so.
Yeah. So, Saurabh, hi, good to see you again.
Hi, Vyoma. How are you doing?
Good, I'm good. So, Saurabh, with you, I have a very specific question. You have ventured into ALYF. It's just been about 2 to 3 months now.
No, ALYF is now almost 10 months old company.
10 months old. Yeah, I think it's been in the news for about the last 3 months.
Could be, yeah.
And it's a vacation rental and fractional ownership concept, right?
Exactly, yeah.
So with you, I have a very specific question more than a general introduction. Has been that, and Shiv will vouch for that. Fractional investments have been around for a long time, largely focused on commercial real estate, right? And because that has been the highest dividend yielding asset class in real estate, right? Also offers steady, high quality clientele. And of course, though, exit cycles are yet to be figured out, but it has been one of the most promising fractional investment platforms for people in the country. So what has been this whole thought process behind offering vacation homes for fractional investment and a long-term rental? And how did this whole thought come about?
So first of all, Amit, Sanjay, good to hear about your journey and look forward to hear from others as well. So, Vyoma, as you are aware, I was with No Broker. So I was the founding member at No Broker for almost 7 years. 2015 is when we started No Broker. So I think so. It's just during COVID second wave, what we saw is that the demand for holiday homes on our platform, which is No Broker, was increasing. But somehow we were not able to do a lot of transactions on the platform. And when I deep dive, what I understood is it's not only the discovery which needs to happen when it comes to holiday homes. People don't see value buying a holiday home due to a couple of larger reasons. The first one in itself is they don't think it makes any sense to buy a 1 crore, 2 crore holiday home if I'm just going to use it for, let's say, 20 to 30 days in a year. Second, I think so buying a holiday home also comes with a lot of hassle in terms of managing the property. For a common public, managing their first home is a hassle. Managing a second home which is far away from your first home, it's a big hassle in itself. So we at ALYF intend to solve these two larger problems. A, we are making holiday homes commercially accessible, by fractional ownership into holiday homes. So one holiday home we sell to 10 different people. So we max it to 10 people. Each one owns 10% of that home. So each home is bought under an LLP and there are 10 max shareholders. Everyone gets to use 35 days in a year. So how we are different from a commercial fractional is that ours is more of a lifestyle product where a person gets access to use their own holiday home. The only thing is he never thought it makes sense to own a 2 crore home if I'm just going to use it for 20 to 30 days in a year. Here you own the same home at a 20 lakh rupees. You get 35 days to use it. And the beauty about the model is if you're not using the property for 35 days also, we rent out on your behalf. So the entire property management on ground or managing your rental, taking care of the legal compliances, everything is end-to-end managed by ALYF. Not only that, we also take care of the exit for people. So when it comes to secondary sale, let's say if today I bought a 20 lakh share and after a year, 2 years, I want to exit at 24, 25 lakh. We as ALYF, our secondary platform helps you find the right buyer also. And it's a share transfer which happens between an incoming and outgoing shareholder.
So it's almost like bringing together the old concept of timeshare, right? Like what Sterling Mahindra Holidays would, combined with the concept of asset ownership in a fractional platform.
Correct. Because I think so the major difference between any timeshare and a model like ALYF is you don't get to own the property. And we feel all of us over here, we know how important the real estate investment is. So when you hold an asset for 5 to 7 years and you get access to all ALYF properties within the same category, the capital appreciation comes to the genuine buyer or the real buyer. So we are trying to democratize the holiday home space. In fact, in Goa, we have launched apartment where the share price starts at as low as 10 lakh rupees. So a person can actually own an apartment in Goa at 10 lakh rupees, get to use it for 35 days. And if he doesn't use it, we rent it out on their behalf. So our entire intent of setting up ALYF is we want this holiday home as an asset class to be accessible to the middle class population, because out of some 290 million families in India, only 2 lakh people own a holiday home. So we feel there's a great potential here. And the way now Indians holiday, people prefer a villa or an apartment more than a hotel whenever they are, going to these locations. So we feel we can add tremendous value when it comes to building supply in these locations. Yeah.
Understood. Wonderful. Great. So Shiv, since you have been a senior in this field, one of the largest fractional investment platforms there is in India today. Okay. Fractional investments have gone through various journeys over the last about, say, 5 years since they've come into play, Strata taking the lead, right? But one thing that has been happening across all the platforms, and you can maybe add to that later, is that one, it is limited to commercial real estate. Two, we hear of a lot of investor interest coming in, but the exit strategy is still quite unclear because there is still a perception of real estate and also a fact of real estate being a relatively illiquid asset class, right? With REITs, only a couple of REITs being listed on the market and not inviting too much fancy investor interest, right? And fractional platforms are trying to do it in the unlisted manner by way of LLBs. And unless SEBI comes in and changes the regulation, that is going to be the path, I believe, for some time forward. So, two-part question to you. What do you see as the long-term solution to liquidity in this whole, especially commercial real estate fractional platforms? B, do you anytime in the future see SEBI coming in with different requirements and regulating this sector? And how will that impact this whole fractional investment platform space?
No, I think that's a very important question for investors. And before I jump into that, just great to be on this panel and good to meet you, Vyoma, and my fellow panelists. So yeah, I think exit is the most important thing in any investment, right? It's easy to take money from someone. You have to be able to give it back, which is very, very important. I think the beauty of, firstly, as a business model in terms of fractional ownership, you're making 9% a year. So in 5 years, you've already gotten back 50% of your principal. So in that sense, it's a relatively safe investment. And like you rightly said, it's while it's been about 4 to 5 years that this industry has really picked up, and companies that have come up. I think that's what's really important is figuring out which property an investor invests in, right? So what I mean by that is I think we're one of the few fractional players to have actually given exits to investors, exited at 17.5% IRR. So what determines whether one is able to exit or not, right? One is what price you go in, right? If you go in at the right price, you'll get the appreciation. You'll be able to exit at a good price. So one needs to really look at the price that one is getting in, and either one has to, and that's where the platform that one is dealing with is very, very important, because you have to look at the team behind the platform. You have to see that they have the real estate experience, the real estate background, to be able to figure out what the right price to pay for the property is. So for instance, us at hBits, we go really, really into the micro. We study each and every deal that's happened in that micro market, and we make sure that our property has been picked up at a below market rental as well as capital value. The other thing is your secondary exchange, right? Your secondary liquidity. So if someone wants to exit in a year, right, you get appreciation in real estate generally over a longer horizon. But we've had multiple investors who wanted to exit in a year and a half, and it could be for various reasons. For instance, one of our investors had a medical emergency, another investor had his son going to university, so they needed to liquidate. So I think there, what's really important is you look at the platform's user base and investor base. So we have about 50 to 60,000 users on our platform. And any investor who's wanted to exit, we've been able to facilitate an exit for them. So kind of two major things, right? Getting it at the right price point, looking at the background of the team, and then looking at the investor base of that platform. To answer your second question,
it's almost like a volume that a stock trades at, as in when you want
exactly
to stock in the
exactly
you look at the volume. So
exactly. It's about
the platforms that will survive and thrive are probably the ones who are being able to generate investor volume to a certain extent, where
right
happen.
Correct. Exactly. You have to have that kind of volume on the platform, and that will happen when that platform is investing in the right kind of properties and able to actually give those initial exits to investors.
Right.
And I think then your second question is a very, very pertinent question. You asked about SEBI and regulation. So we've been part of the consultation process with SEBI. And in fact, they came out with a consultation paper in May, detailing out, they're calling it MSM REITs, right? Medium, small, and micro REITs that kind of regulates the whole framework. So in a sense, that really helps your liquidity as well, because now what SEBI has proposed is that the units will be listed on the exchange. So again, that enhances the liquidity that's available. SEBI's also proposed a 10 lakh minimum ticket size, while most fractional platforms, at least commercial fractional platforms, are at 25 lakhs. So again, with a lower ticket size, there's obviously a larger universe of investors. And with SEBI coming into play, obviously, even further enhances investor comfort. So we really welcome this SEBI regulation that's imminently expected.
Yeah, and I'm sure it will create a whole liquidity tradable platform over a period of time where you will have listed REITs in these segments coming up, and also kind of having a consolidation in the space where only the meaningful platforms with high quality assets will survive.
No, exactly. I think that's exactly it. Because see, if you look at the REIT market, which you said, there are only 3 REITs that are listed today with a total market cap of about 55,000 crore. But there's 7 lakh crore worth of grade A real estate in India. And I think that's because the traditional REIT model is only limited to a handful of the 5 largest developers in the country.
Right.
But there are a lot of mid-sized developers where this MSM REIT platform will really add value.
Interesting. Very, very nice insight, Shiv. Thank you for that. I'm sure it helped a lot of viewers understand what's coming up and what's going on in the fractional space. So yes, over to Sunny. Thank you for being a patient listener so far. Finally, your turn. Okay. So, Sunny, you also had a very interesting journey. You have been, college founder, ISB, right? You started your first company while at ISB, and I think you have had an exit as well, right? And currently, you're on to starting Trip. It's a property management platform. So, to you again, since you operate in a different space, but a space which has been around for the last 7-8 years, right? There have been property management automation apps being available in the market. I think from a product point of view, many of them have matured to a stage where the product is very, very strong today, and so is their penetration. So currently, if you see, there are about 2 to 3 apps which dominate the property management space, if I may say, right? What is your view on what's happening in this space? Where do you see there is space for some disruption happening, and how at Crib are you trying to solve that problem?
So thank you, Vyoma. First thing I will clarify that I didn't start my last company while at ISB. So I didn't join ISB at all. I was there for 2-3 weekends and then I dropped out. So I started my last company when I was at Ramjas College, University of Delhi.
Okay,
so
that's a star on you. That's a badge on you, like college dropout young founder. I'm sure
kind
you
of.
do.
So I come from Delhi University, and this was 2016 when the co-living boom didn't happen in India. And everybody around us was cribbing about their hostels and PGs. So we started a co-living company with the name Your Shell. We ran it for 2.5 years, did 20 crores in revenue just out of college, and sold it at a good valuation to India's biggest player, Stanza Living. But while running that company, we realized that this market is very matured and has been for decades, PGs and hostel market, but there is no software to manage it. We were the coolest, youngest co-living operators out in the country. We were 21, 22 when we were running it. The maximum technology we were using was WhatsApp. We used to send reminders to people manually on WhatsApp, and that was the maximum technology we were using. See, the property management space, there are different segments. So for commercial real estate, there have been players who have been around, but for the residential space, specifically for hostels, PGs, co-living and student housing, their tenant size is large, and you need a property management space software only when the tenant space is large. And when we talk about apps like No Broker or No Brokerhood or MyGate, they are not property management. They are more on the society management. They cater to who is on the gate and who is coming, who is going. We cater to what is the rent of the property, who has done the agreement, who is the tenant, what all is happening in the property. So And that is why when we launched in the market last year, we got a very amazing response from these hostels and PG owners because they didn't have any other software before us. So currently, we are live across more than 2,000 properties, 150,000 beds. So that comes out to be gross rental of around 1,200, 1,300 crore a year, which is kind of being managed on our platform. So this is, I believe this is a very new market that is evolving, not just in India, around India also. Like we have demand coming up from UAE, or the whole MENA region or Singapore and all of that, because there is no software to manage co-living.
Wonderful, great. So we're now getting to like a stage of, PropTech startups where the core problem is solved, but now we are getting into the niche of, managing certain asset classes or providing services for certain asset classes, which probably weren't even existent about 5 years ago, right? I mean, the whole thing of
going vertical, building vertical solutions about it.
Exactly. So there, co-living as a vertical itself wasn't existent till about 5 years back, right? Now in itself is an industry, and within the industry, you're trying to create service solutions to manage that better, right? Great.
See, co-living has been in India for decades. Like they were called hostels and PGs. Like I talked to PG owners who have been running this for 30 years. It's just that co-living as a concept, co-living is the broader term for the whole.
And organized, yes, and organized chains is that. Hostels were more unorganized, independent buildings with no standardized guidelines for management, but now you have a much more organized industry.
Yes.
Yeah, great. So now that we have a little bit of an insight into each of your spaces, the products and services that you operate in, a few open-ended questions, any of you could take that up, right? So one of the things that I'm sure everyone wants to know is the PropTech in India has been around for maybe about, in a mature way, maybe about 7-8 years, around. Most of the early solutions were in the space of doing some AR, VR for selling real estate. And, a lot of players came in that. And then maybe we figured out that, hey, that's not exactly what a high involvement asset like real estate needs. There have been a lot of improvements in solutions in the backend space where Mr. Sanjay is operating in about using different quality of materials, about automating processes in construction, automating procurement processes so that procurement and construction become more efficient, etc. And then there have been another category of host of services that operate on top of products where you are giving service-based solutions. It could be, it could be managing an apartment complex. It could be having sales and marketing services, right? It could be providing labor force aggregation, etc. That's happening. The fourth thing is about investments. So there have been a host of fractional investment layers and raising funds through whether it's the whole VC route, getting private equity players into real estate, or having fundraising through these fractional investment platforms. So in each of these spaces, we have one founder today who's operating in all of these. Just wanted to get some insights as to where do you see the PropTech scene in India as compared to what is happening in more matured markets. It could be, in Middle East or US or maybe even China. If any of you have had direct comparisons in your field or otherwise with what's happening in these matured markets in real estate, and what do you think is the need of India right now in that space?
So I can, just add a few thoughts, Vyoma. I think you mentioned that PropTech is relatively new, relatively 7-8 years old in India, and it's kind of been lagging behind other techs, for instance, in India. And I think there's a reason for that, or there was a reason for that, but that's dramatically changed now. I think the reason for that is, if you look at how real estate was in India in the say in the last 40-50 years, except for the last 5-10 years, it was a very supply constrained industry where developers had a lot of power, and the ability to construct, the ability to acquire land was something that was restricted to a few individuals, and that's where the real value was in the whole industry or in the whole supply chain end to end. I think India as a country, as an economy, and then real estate specifically has really professionalized, has really become a very organized sector compared to where it was, which allows kind of the development land or the land acquisition part of the business to become a little bit more simpler, a little bit more easier. So then for the customers, you have to have PropTech plays that allow players to either reduce their costs, increase their quality, or increase revenue. And that's where PropTech really adds value to businesses. So for instance, if you look at, if you look at our industry, if you look at fractional ownership, in the US, you had in 2013, 2014, the Jobs Act changing, which allowed a mushrooming of fractional ownership players to come up in the United States. I think in India, at that point, you probably didn't even have enough grade A supply. Your first REIT came into India in 2019. The understanding and the maturity of the asset class wasn't there 10 years ago as to what it is right now. In the US, you have these companies like Cadre, for instance, which is a comparative to us in the US, $10 billion under AUM, right? And I think people in the US and external markets have really appreciated the ability to invest directly in these properties. They've had REITs in the US for 20, 30 years, but the direct access, the psychological comfort of saying that I'm a 1% owner or a 2% owner in this property is very different to a REIT, where REIT is like a mutual fund, right? You're trusting someone else. So I'm not saying one is better or one is worse. REIT is like a mutual fund where you're investing in a basket of products. You're trusting the mutual fund manager, the REIT manager. While fractional ownership is like stock picking, where you want to say that you studied the balance sheet, you looked at the financials. So in our case, you looked at the title report, you looked at the leave and license agreement, and then invest in that property. And I think these are things that the Indian customer now demands today. They demanded it 10 years ago as well, but they didn't have the ability to demand as much as they do today because the value chain has moved and India is just maturing as an economy.
Great. Yeah, I think in that, I do feel very strongly that one of the things that happens brilliantly in US and is yet to come to India, and which could be a game changer for this industry, is the secondary market ease. The ease to transact a property, it could be residential, commercial, or holiday home, etc., in the secondary market. Because as Indians, we are still chasing primary market. Everybody wants to buy a primary product. Right. And of course, it's the quality of the construction. It is, having so many brands around where it's very difficult to put a value to a secondary sale. So there is neither a valuation mechanism for a secondary exit, nor there is a marketplace, a healthy, strong marketplace or a system around it created, which can ease secondary market transactions. So I think that's definitely something we could learn and develop from the matured markets. Yeah.
No, absolutely.
Yeah. Great. Amit, you were saying something.
Yeah, so on the first and second aspect of the problem statement or the opportunity areas that you shared, especially on the construction, the way the construction is being carried out, there are very mature tools and techniques which also have a deep adoption in the way the construction is getting carried out. So for example, there's a company called Procore in the United States, a public company, started almost 12 years ago, now doing $1.5 billion in revenues and almost $20 billion in market cap. The name of the company is Procore. So they offer a construction management software, which basically brings all the aspects of managing the project into one single platform, one single place. So the problem which I see it's happening with with all the, I think, the low income and the middle income economies, the way the construction is being managed, we are basically rising from the roots of traditional processes, adopting some bit of technology in silos, and the current state of systems in which the construction is getting carried out, the procurement and finance is getting managed in one ERP, the progress monitoring happens through emails and WhatsApp, the tracking happens through different kind of tools, and so there are different silos of information around every single project. And basically a lot of people are in between who are bridging the gaps of these silos, right? And that makes the whole process very tedious and inefficient from the time perspective. From the cost perspective, it is still manageable for India because the cost of labor is still affordable. But as we go along, when our economy per capita rises from $2,500 to maybe $4,000 in the next 10 years, or $5,000 in the next 10 years. So eventually it is going to put a pressure on both cost and timeline, right? And definitely the way the aspiration of the country is growing, the way the kind of investment and growth we are to see in the infra segment, I'm quite hopeful about the way technology is going to percolate in the way we operate our projects on a day-to-day basis, and not just on the L&T and the DLF level, but also in the in the smaller project domains be it a small retail or a small fit out project. So this is, I think, one trend. And to give you some stats around it. I sold a logistics SaaS solution in India for 4 years, and the traction that we used to get in closing one deal, the lead time used to be around 6 months. It took us almost 3 to 4 years to get to an ARR which was sustainable, right? And now when we are selling the construction management software, we are selling it to contractors and design studios predominantly and developers. So these are the three personas that we are selling the software to. The solution is just taking off in the last 4 or 5 months. So either of these two things are happening. Either India, as a market as a whole, is waking up to the efficiencies that technologies can bring in the ecosystem, and probably the whole software consumption market in India is growing, and that's where construction is basically kind of getting benefited from it. Or second, or maybe construction specifically, right, is going to get efficient in leaps and bounds in the next 10 years. The pace of change we are going to see, and we are not the only operator. There's a company called PowerPlay. There's a company called I don't know. I'm forgetting. They're like 5 to 10 mature homegrown construction ERP softwares, which I'm seeing ads of on a day-to-day basis now. So it has already started happening. So this is one definitive trend wherein not just on the ERP side. Like if there are people on the listening side who wants to build some software solution for maybe SMB market or for an enterprise market, there are specific great solutions which are now getting very popular in USA and Europe. So for example, there's a company, I'm again forgetting the name, but what this company does is it helps small contractors get their payments from the homeowners for which they're developing the house. So this small app, they recently raised $5 to $7 million in seed, and they are doing absolutely phenomenal. So these simple solutions, wherein this is a very pinpointed solution, picking up a construction use case and just solving it very deeply. So these kind of solutions are flying like rocket in Western, and there are multiple bunch of other in the construction domain. I know at least 5 or 6 category of pointed solutions wherein somebody has solved them deep, and the solutions are flying very well. So I'm hoping that this kind of trend will also kind of follow in India, as India SMBs and enterprises kind of wake up to the or maybe becomes more aligned to the consumption of software to improve the economies of the business.
So you're essentially saying that there are these softwares which are going to help bridge the material gap of getting material from the supplier to the developers, or B, getting the labor connected with the supplier and developers, or C, get the cash flow moving faster, like you said, the collection solution for contractors, right? So if you get the labor or the material or the cash flow collected and move faster, from the source to the destination, it is essentially going to help you make the supply chain and hence the construction timelines much more efficient, and probably at a much lesser cost as well, by removing the middlemen who are present today.
So Vyoma, actually, it depends on what kind of solution you are building. So what we are building solves kind of everything to a certain depth, to a certain level of use case. Definitely, it's not for everybody to use, but for a certain level of use case, we kind of solve all these 3 problems. There are other companies as well which kind of solve one bit of problem for a very vertical, large, different kind of a customer spectrum. But the part of the question you asked, I think the categorization is one is there are process improvement things like our software or multiple other software, and then there are actually the supply builder companies, like companies which are actually building the supply side of things, where there are companies like Mystery Store, ZipMat, the Material Depot, Infra Market, Off Business. There are lots of companies in India which are coming up, which are catering to construction materials, right? And then there are multiple other companies which are catering to the manpower requirement of the site. And then there are companies which are catering to the cash flow or finance which is required by the contractor. So there are supply side ecosystem as well, which is shaping up, and there is a technology side ecosystem which is shaping up. Yes.
That's great. Great. Yeah, lots of insights from that one. If I can ask Sanjay, in the material side, right? I know you are dealing with your solution very interesting. We all got an insight into that. Apart from these heat solutions that you're already dealing in, where do you think is a disruption happening in real estate in terms of changing the kind of materials and construction technology that is being used today, and where do you think it's going in the next, say, 3 to 5 years?
Nanotechnology, as far as our product is concerned, plays a very, very vital role not only for this window glasses, but nanotechnology based products and chemicals are moving quite fast in the construction industry. Nowadays, stone sealants, products like epoxy flooring, which was so common earlier. There are sealants which are available. There are anti-graffiti paints which are there, which actually eventually reduces your cost in terms of upkeep also. At the same time, work hugely and have a very, very huge impact on energy conservation. Why I'm talking about energy conservation so much is because if I'm right, Modi ji has a vision to make India carbon neutral by 2030. And that's a huge task, huge task. So entire government machinery is today working towards, reducing load on energy consumption. Every government structure which comes up today, whether it is the new parliament building, whether it is a new Nyaya Bhavan, whatever comes up, Supreme Court of India, anywhere a new structure that comes up has to be green building certified by a government body, which is called as Griha. So the entire thing is today, if I actually see any disruptive movement happening today, is in terms of energy conservation, because ultimately it reduces the load on the planet as well as, upkeep of the buildings and maintenance later on going forward. So this is what my take is.
So where do you think there is space for young startups, say young entrepreneurs who want to start off and address some solutions in the green building space? Can you name 1 or 2 areas where you think there is a great opportunity in a little more specific space?
See, what I feel today, we have recently started operations in December in Middle East. So we have opened up an office in Dubai. And we were of an opinion that Dubai as a country is ready for facing that kind of climate. Right? Climate is harsh. It reaches 52, 53 degrees. You hardly find any non-air conditioned space. And we were of an opinion that, okay, we are launching, but that launch was, very, I would not use the word half-heartedly, but we are very, very speculative about how it will behave. But surprisingly, even a country like Dubai, where, you have top-notch professionals across the globe are being hired and put in there. So companies and brands like MR, Nakils, all these guys have put in the best of the glasses. Still, when they see our product, we have been doing quite a couple of orders. If you ask me honestly, maybe next 3 months we'll be doing better job in UAE than in India as well. Because number one, acceptance to a new product is higher there, paying capacity is good. At the same time, people are actually relating towards the issue of global warming and climate change.
Yeah, it's a newer space to solve a problem.
Yes.
For sure.
And now where I see, number one, yes, glass industry is something which I am looking very closely at today. Saint-Gobain's, Asahi, and if you have to think of a third company who can do a better job in glass, you would have to actually rack your brains around it, who's the next one. So glass, I feel, still has a lot of scope to be done. Glasses are being modified. There are low E glasses which are coming up. But I came across a very, very, strong glass manufacturer in China. But because it was China, so we are going a little slow on it. They are developing a glass which acts as a, not only it blocks the heat equal to what we do, but it has transparent solar cells placed on the glass, which means the glass looks like a glass, but actually acts as a solar panel for you. Amazing. So the entire energy which we today block and just block outside to save the energy inside the structure, they are actually creating the energy there.
They're harnessing the energy, to be used.
Yeah. So that is what we are looking forward to bring up next, but in a more reliable manner. Today, I feel it is like half cooked. So that is one space which I feel, and if you see nowadays, all the commercial structures come across only on the frames and glass. If you talk about the facade.
Right. True.
So that has a huge scope.
Yeah, great. So one is keeping how to manage the problem of global warming. The second thing is how to use sustainable energy in buildings that we are constructing, maybe even at a residential level and not just at the commercial building levels.
Correct.
Great. Okay. So for Saurabh and Sunny, very pointed question, because you deal with a lot of these younger customer bases, right? For Saurabh, you're trying to reduce the ticket size of a new generation clientele who is okay with spending money on experiences on holidays, but they also want to have a flavor of investment into it, right? And for Sunny, because you have in your previous venture and even now, you are dealing with an audience in probably their late teens or in their 20s who are staying by themselves. They're probably single, and they are okay with, not investing into real estate as a space, right? So where do you see disruption happening in the space of, say, a rent versus buy kind of question, which has been in real estate in India for decades now, right? Or where do you see real estate consumption changing in the Gen Z audiences? Any insights from where you have dealt with your customers, and what do you see the future of real estate is for this younger generation?
What I have realized, see, I meet a lot of young people, as you say, and these influencers, a lot of finance influencers are all my friend, and they keep selling that renting a property is way better than buying a property. And people understand this also till their 30s, because it is a better financial decision. But after a point of time, what I've realized in life, apna ghar apna hi hota hai, and this is something our parents have told us and their parents have told them. So what I've realized is the younger generation earlier wants to kind of a belief that we want to rent properties and not buy. But as we mature in life, this thinking changes and everybody wants a permanent place to themselves.
And as you have more money, I guess that also
more money, more disposable money to place there.
Right.
See, if you would have asked me 3 or 4 years back, Sunny, what is your take on rent versus buy? I was 100% in the favor of renting and not buying. Currently, I am 70% rent, 30% buy. Maybe 5 years down the line, I will be 30% buy, 30% rent, 70% buy. So this evolves as you grow in life, as you make more money, and as you understand the importance of a permanent home in life.
Sure. Okay. So you're saying that essentially, while disposable incomes are increasing in the younger audiences, maybe the desire to own a house is only coming when you are in a slightly later phase in life, maybe towards your end 20s or maybe towards your mid 30s.
When you are young, like for example, I started my career in Delhi. After selling the company, I moved to Gurgaon. Now I moved to Bangalore. So when you are young, you don't want to fix yourself to a permanent place. You want to be as flexible as possible. You can travel, you can, like I meet a lot of people who are working from home, and they're not even working from home. They are traveling to different states, different cities, and they are working from beaches, working from mountains and all of that. But as you grow and when you have kids, they have a permanent school to themselves and all of that, then you kind of understand the importance of home. Like I have friends who graduated out of ISB. Earlier they were in favor of renting. Now they have ended up buying properties on maybe EMIs and all of that. And somewhere you realize that the kind of rent you are paying in cities like Bangalore and Bombay, you can give a good amount of down payment and the same amount can be an EMI of the house also.
Right. And that's also an interesting space where a lot of new startups are coming, is one to solve the rental easing, like rent in an easy way, and also hop from one place to the another, one city to the another in an easy
this co-living has been a really game changer in terms of hopping from property to property. Earlier you have to be kind of, if you want to take a flat, you have to find a take a 11 months lock-in, fix up furniture, fixtures, get a maid, get a cook and all of that. Now you can go to a co-living space and you can start living from the same day. You don't have to buy furniture, you don't have to get maids and all of that. So this is kind of the India adopting the Western culture, wherein they don't buy properties.
Giving scope to these startups as well of rent living and co-living, etc. and all, and also possibly increasing potential for fractional investment platforms also to expand to these audiences who are probably not paying an EMI every month for a property that they own, but they do have that disposable income, which in some way could be diversified to real estate as well. And that share of the wallet is then getting diversified into something like a fractional platform.
one thing I also think is that earlier when I was in college, there was not a lot of people who were giving the importance of trading stocks and all of that. So even now today, I don't trade in stocks. I have a wealth manager who does all of that. I don't know trading, but the current Gen Z generation, which is in college right now, they have a lot of finance influencers and all of those people telling them that do stocks, do investments and all of that. Even in my office, people who just graduated out of college know a lot more about stocks and mutual funds than I do. So I think this generation is going to put in a lot of money in stocks and mutual funds as compared to real estate initially in their career.
Understood. Right. So Saurabh,
Yeah.
one thought from you before
Yeah,
we
so-
wrap up on either this, or if you want to shed some light on how can real estate as a sector attract a lot more younger investors, than
So-
what is done.
I actually both are related to me. I'll tell you one thing. I rent versus buy. Ever since no broker happened at 2015, at this we have been dealing with a lot of rental and resale and buy and sell transactions. So, Vyoma, I think so. To me, this entire thing is pre-COVID and post-COVID era when it comes to the rent and buy section. Pre-COVID, the typical age group which were renting these apartments, especially in a larger city, were a lot of people between 30 to 45 years, which are the millennials. And the buying, I think so, used to happen after 40, 45 years because people wanted to get more stability in life. They were not sure whether they would continue to be in the same destinations or not. And we always saw reasonable increase in rental with never being a problem of supply. Aaj aap Bangalore rehte ho, Bombay rehte ho, you typically get supply. You used to get supply very easily. I think so post-COVID, what happened, one, influx of people coming back to the larger cities, along with offices opening again. There was first time a dearth of supply in a lot of larger cities where the rental shot up drastically, where we saw rentals going as high as 12 to 18%, which was unheard of. So I think so people realize even after interest rate going high of home loans, people started buying homes and we saw massive jump as far as the primary sales is concerned in the country. And so, so as people started now buying properties in outskirts and even holiday home destinations. So I think so post-COVID, the buyer attribute has changed and suddenly this income group of 35 to 45 years have now started investing into real estate in big way. And hence we'll see a lot of developers also adopting to the mindset of the millennials. What are they looking at? Larger apartments, working from home. So I think so that is there and that is bound to be there. According to me, the buy phenomenon has come, and to all of us, I think so it would be a great move where we will see this demand in entire residential space and commercial space would only go high from here, is what my sense on it is. Yeah.
Okay. So the whole economy and the more disposable income that has come because of a lot of foreign money chasing India, and of course, a lot of Indian startup economy founders or employees taking advantage of that, having more money to take home. And the chunks of money that are coming are much larger than what a generation before that would have had, right? They were mostly salaried and the EMI was limited by the kind of salary they're making. So now people make money in chunks. And that by itself is giving that whole boost, I believe, to real estate, where when you get a large chunk of money, you start thinking beyond stocks, mutual funds, and those monthly investments, and start thinking to invest in an asset class which is much bigger, which is possibly the closest comes is real estate, right? So great. We've had a fantastic time. I think it's time for wrap up. The next panel is also here. So if I could just wrap up the key takeaways, and we've had some very, very interesting discussions, made more interesting because we have such a diverse set of startup founders who have been with us today, right? So for all the listeners, the key takeaways, in my opinion, have been that number one, things are going to get changed in the investment way in real estate, because a lot of democratization of investments in real estate are coming, where a much bigger portion of the country can start investing money with lower ticket sizes. And with the SEBI regulation changing, which hopefully we will see in 1 year, if not 2, a lot of these investments in real estate will become a lot more liquid and a lot more tradable. So that one space that is changing very rapidly. The second space, if I may, is one is the ease of labor and movement that is happening from the supplier to the end user. right? And which has been traditionally in real estate, a space where a lot of middleman and a lot of red tape has been happening. So that is traditionally how people in real estate have made money. There is money exchange while trading in land, while doing procurement, while awarding contracts, right? So because of a lot of startups coming into this space and removing the middlemen, the construction is becoming faster, the deliveries of the projects are faster, and also the efficiency of the ability to procure at lower prices is being able to give the end consumer a better product at a very reasonable price. So one is the ease of material and labor movement. The third possibly is making buildings which can survive the upcoming global warming predictions that are there, and making more heat resistant or global warming resistant buildings, green buildings, and possibly using a lot of green energy efficient materials in the kind of buildings that we are making across commercial, residential, and more, right? The fourth trend is possibly using a flexible living economy, if I call it that, where a lot of people are now not okay with having a fixed space where they will be operating out of, living out of for the next decade or so. And they're looking at a flexible living arrangement. A lot of startups of co-living, rental easing, trading and creating secondary real estate transaction spaces are coming and disrupting that space, right? And possibly a fifth one is making cash flow very easy in real estate. And this has been one of the biggest problems that has plagued the sector, and which is why you can see only about a dozen real estate companies listed in India today from the traditional sector of development, right? So cash flow has been one thing in which a lot of players do not survive for more than 5 to 10 years, or a lot of players remain localized to the market where they have operated in. So a lot of players, including us at Flow, we're also trying to disrupt the cash flow entering real estate. A lot of funds are coming to India. They see Indian real estate up for a much, much more mature delivery than it has for the last few decades. And a lot of good money has started chasing Indian real estate and the prop tech space as well. So it's been a great session. I hope the audience also had some good takeaways from it. Thanks for being a wonderful panel. Amit, Shiv, Sanjay,
Thank you.
Saurabh, and Sunny. And thank you, Sapna, as always, for organizing this platform.
Thanks, Vyoma. Very nicely you wrapped it up and gave us, the summarized this entire discussion. And thanks to all our eminent speakers here. They are all startups and doing such great work within their segments. I think kind of a lot of takeaways for a lot of many other startups, I think, from them. So thank you so much for that wonderful session, and Vyoma for so nicely putting it all together. Thank you, everyone. Thanks, Shiv. Thanks, Mr. Sanjay, Sunny, Saurabh, and Vyoma, everyone here today who have joined us. Thank you so much.
Thank you. Thanks, everyone. Learned a lot.
Thank you.
Thanks.
Thank you, Sunny. Thank you for being here with us.